Hey everybody, I got a great question on YouTube, actually, of all places. Normally I start these videos saying I got a great question on TikTok, but this time it was on YouTube. I'm gonna raise this up a little bit. I feel like I also do this in every video. I wanted to get that Stock God shirt in on the shot, but then it feels like I'm looking down. Question was from someone on a YouTube video saying, I feel like I always get in too late. I always get in on the trend too late. What can I do to not feel like I'm getting in or missing out? And at first, because it was a longer post, as I was reading the post, my mind started working on how I was going to respond to the question. But the question changed, so I'm going to give you two responses for the price of one video. And that is, there are going to be two different answers here depending on which scenario we're in. So on the first part of her question, which is what I'll answer first part of the question was, I feel like I'm always missing out. And my mind was already going to technical analysis is your friend. In 1929, JFK's dad noticed that the shoe shine boy was giving him stock tips. And he said that at that moment, he realized that the markets were completely overbought, that too many people were talking about stocks. Stocks were too hot. And at that moment, he said, uh-oh, markets are going to start to pull back now. Because when you're getting stock advice from the shoe shine boy, maybe time to step back. And I noticed someone on TikTok who will probably see this video, because she comments on a lot of my videos, said that she was at Target the other day and noticed that the employees at Target were all talking about Dogecoin. And that reminded me of JFK's dad and the quote about the shoe shine boy being a metric that he used to say, hey, maybe the markets are a little overbought. When the shoe shine guy is talking about stock tips, and you can equate it in more modern terms, the guy at Target, when the guy at Target is talking about what stocks, or in this case, cryptocurrency, markets maybe are a little oversaturated or overbought, and you got to wait for them to pull back a little bit. And that got me thinking we think about that in terms of like a macro level, but you can do that on a micro level too. And in that case, technical analysis is your friend. Technical analysis is there for you to say, whoa, too many people are in on this stock. Don't chase, don't get in the tippy top. Wait a second, wait for a pullback, wait for a correction, wait for things to level off, cool down, consolidate, and then you can get back in. So I'll give you a real life example. There is a stock that I traded years ago. Ticker symbol is STON. It is a death stock. Stonemore Properties or whatever. Maybe it's not properties. It doesn't matter. Stonemore is graveyards, crematoriums, funeral parlors, everything basically to do with death. I bought it a long time ago because I thought it would make a great investment. Started to tank. I sold. I cut my losses. But it was always a stock that I kind of kept an eye on. And within the last couple of years, or maybe a year, I noticed that it was bouncing in between whatever the trading range was at the time. And I said, hey, I bet I could trade this stock. So I keep it on my radar, and occasionally I trade it, and occasionally I don't. About a week or so ago, I looked at it, and I noticed that it was up 6 or 7% on the day. And I went, whoa. Well, I'm not going to chase now because it's up 6 or 7%. Very next day, it was up another 7 or something percent. Don't quote me on the exact numbers. Someone can go and look at the charts, and you'll see. But it was up again the very next day, and I thought, damn, But that's one of the downsides to this job is, you're always going to say, if I had known, but you didn't know. You didn't know that it was going to go up 6% and then 7% the very next day. And then the next day after that, it went up 30%. The stock went up 30% on one day. Of course, hindsight, I'm kicking myself going, oh yeah, all the signs were there. I should have bought it 2 days ago, but I'm not going to chase. So the first part of the question was, how do you deal with missing out on these opportunities? And the best thing I can say is you got to wait for it to cool down. Because if you buy at the tippy top, you are chasing and you are not listening to reason, and you're being maybe inexperienced, maybe greedy, maybe both, right? A lot of new traders are inexperienced and they're greedy because they want to make money and they want it to be successful. They want to be good right out of the bat. And so what you often find is they kind of throw caution to the wind. They go, it doesn't matter. Doesn't matter that it's up 14% in 2 days. I'm buying. And usually their logic is, I missed out on a 14% rally, so now I'm buying because I want a 14% rally for me. I don't like that everyone else was getting 14% gains and I missed out on it. So I'm going to buy now, even though we're at the top of the rally, the very top of the rally. I'm going to buy at up 14% because I'm hoping for another 14% on top of that so I can make what everyone else made. Sometimes it happens, right? In this case, it would have gone up 30%. But other times it doesn't happen and you're buying at the top of the rally. And that's why personally, I think it's best to just cool it, wait, step back. Yes, it might go up a little higher. At that point, again, you definitely don't want to chase because now it's really, and sure enough, if you look at it today, it's down considerably and it might continue to go down or it might consolidate. And that's what we're waiting for because we're not mind readers and technical analysis isn't astrology and it's not, you're not a psychic. There's no way to know. That's why it's best to just cool off. Maybe you miss it. Maybe you miss the opportunity to get in the first time. But what you wait for now it's a stock that's on your radar. You can get a piece of paper, you can write down a little note, and it can be on your little watch list. And now you'll be paying attention. And what you'll be doing is paying attention and waiting for either a severe pullback or no pullback at all, but it just consolidates. What consolidation means is that the selling has stopped, but the buying isn't pushing the stock higher. So you've got this kind of tug of war between the sellers and the buyers. There aren't enough sellers to drive the price lower, but there aren't enough buyers to push the price higher. So you end up kind of, at a stalemate. And that's when trading ranges form. So you might see a stock is bouncing all over the map, and then it consolidates into a very narrow trading range. And that stock bounces in a very tight range. And it can bounce in that range for weeks or days or months or whatever. But the more I read the question, the more I realized it wasn't about missing out on an occasional trade or whatever. The remaining part of the question was, I feel like I always miss out. I feel like I'm always getting late to the dance on stocks like GameStop and Dogecoin, which isn't a stock, but similar. I'm missing out on these big, huge trend kind of situations. What can I do to not miss out on them? And the answer is not much, because you don't know which one's going to be the hot shit rock and roll stock, right? You've got to remember, when AMC and GameStop were flying, there were other stocks that people were talking about, right? They were talking about BlackBerry, they were talking about Naked, AMC, of course. Everyone was comparing to GameStop. GameStop was the one, and then everyone was going, what's going to be the next one? And, if you put some money in AMC, maybe you made some money off of it. Only maybe, though, because if you didn't sell and you didn't take in your profits, what happened to AMC? Everyone was looking at GameStop, and then they were looking at AMC going, AMC is going to do the exact same thing that GameStop did. There's a couple problems with that. First of all, different short interest, different market cap, different number of shares outstanding, different price, right, for the stock. Maybe lower or higher floats. I can't remember which had which. But what we ended up seeing was everyone was going, AMC is going to be the next GameStop, so they all piled into AMC. Now, when AMC rockets up to from 4 to 9 to 20, if you were smart, you took your profits because you said, hey, I just doubled my money, I'm out of here. If you were inexperienced or greedy, you held, hoping that AMC would go to 200 like GameStop or 400 like GameStop. When it didn't and it fell back down to 9, potentially you're sitting at break even, or potentially you're sitting even at a loss if you bought AMC in the teens. So the point is, you can drive yourself absolutely crazy trying to find the next stock. Which one's going to be? Imagine if you had bought BlackBerry or Naked or one of these other stocks that everyone was talking about around that same time that never really went anywhere. While you are constantly, that's not, by the way, this isn't what stock trading is. Stock trading isn't just copying the trends and looking for the next big stock to pop off. Is it going to be GameStop? Is it going to be AMC, BlackBerry, Naked, Dogecoin? You're going to exhaust yourself, and more often than not, you're going to be wrong. You're going to be wrong because it's always going to be one of those hinds. You're either going to have to put a lot of money into every random stock and just hope that one pops off, but that's gambling, that's not trading. Or you have to just forget about it, because what's going to happen? If you put it in, if you put the money in the right stock and it takes off, you're going to suddenly proclaim yourself a genius. If you put the money in the wrong one, you're going to kick yourself. Oh, I should have put it in that one, but I put it in this one. Oh, I'm so stupid. Next time I'm going to put it in the other one. And then the next time, the one that you do buy is going to go down, but the one you didn't buy that you wanted to buy, but you second guess, you can see how this can drive you absolutely fucking crazy. That's not stock trading. Now, of course, it's fun to get in on these stocks, right? GameStop was fun. AMC was fun. Dogecoin is fun. And there's nothing wrong with throwing a little bit of money in these stocks and hoping for the best, taking some profit along the way as it's going up and up. Yes, these things usually will continue to go higher because they've got the internet behind it. They've got Reddit. They've got all these social media sites, platforms, TikTok, Instagram. People are push. So, nobody knew GameStop was going to do what it did, right? Remember when GameStop was 20 and then it went to 40? And my friends were calling, should I buy it? Should I buy it? And I was saying, look, it just doubled. It was 20 yesterday. It's 40 today. You crazy? You're going to buy something that goes back to what we were talking about. I missed out on the 50%, it doubled. I want 50%. In the case of GameStop, but these are like 1 in a million stocks. This kind of thing doesn't happen all the time. It happens occasionally. And what happens is new traders think this is how it happens all the time. So I just gotta constantly be throwing money in these random stocks and hoping that it's the next one that pops off. And while you are buying all of these, internet stocks that you hope are gonna pop off, what you're doing is you're missing out on the opportunities to get the small, consistent gains that allow you to be a successful trader. So while everyone's over here looking for the next hot thing and they're flushing tons of money down the toilet, the consistent, experienced traders are going, oh, what are they talking about? Maybe. But I'm over here on my stock. I don't really know what's going on social media in terms of stocks. I don't pay attention. I've mentioned this before in other videos. I tend to live in a stock trading bubble. I live in a bubble. I don't pay attention. I don't really. But of course, if something catches my attention and I hear about it, maybe I'll throw a little bit in it. What's funny is I get a lot of comments on social media when I say, hey, if you've got profit in Dogecoin, you got profit in AMC, you got profit in GameStop, you should take it. And instead of getting like, oh, that's good advice, thank you, I'll take a little bit of profit and then I'll YOLO the rest. Or you know what, I don't need the profit because I'm successful in my 9-to-5 job and this is just a for fun kind of thing and I'm going to YOLO all of it. And if I lose it all, who cares? Because it doesn't mean anything to me. Whatever. If you're living very below your means and you've got medical bills or debts or student loans and you make tons of money, greed can get in the way. Imagine buying GameStop at, 200 or 300. It goes all the way to 400 and you're thinking, oh my God, I've doubled my money. I should sell. I can pay off some bills. But you don't because everyone on the internet is going, it's going to go to 1,000 next. And you go, boy, I would sure like that. You just shot yourself in the foot because now it's 160. And if you bought it at 200 or 250, you're sitting on a loss or you sold and took a loss. Either way, boy, you got some regrets. So the best thing to do if you're really struggling, people talk, this could be the greatest transfer of wealth of all time. Only if you take your profits. Yes, these things likely will continue to go up if there's the huge momentum behind them like we've seen with these GameStops, Dogecoins, AMCs. But there's a chance that they might not. Or there's a chance that by the time you heard about it, like by the time your shoe shine boy or the guy at Target is telling you about some hot stock, that it's completely, by the time it's reached the masses, the people who don't really know, but they're just hearing you, buy Dogecoin. Usually it's oversaturated and it's going to pull back. Doesn't mean that it's going to pull back forever. Doesn't mean that it's going to drop to its previous price, right? It just means that it might pull back a little and consolidate, right? Remember that tug of war between the buyers and the sellers, and it might hold off. There might not be enough sellers to drive it lower, but there might not be enough buyers to push it higher. We don't know what price that's going to be at. If you want to buy some, it's okay, right? It's exciting to be in these stocks. I was in Dogecoin, I was in AMC, I was in GameStop for a split second, but I got out because I thought, well, I'm wasting my money. I'm buying at the top when it was around 200 and I sold it like 250 or whatever. And then, of course, it kept going. But, who knew? Nobody knows. That's the point. And the worst thing is the internet, with hindsight, is you're always going to find some smug asshole who's going to say, I knew. And they're going to try to shame you into feeling like an idiot for taking your profits. But just remember this. If you took profits, you have more money now than you started with. So the gist is, to wrap it up, if you feel like you miss out on these opportunities and you're getting in too late, that's kind of how it goes. There's no real advice here, especially in these hot internet stocks, because no one knows what they're going to do next, right? I thought AMC, or I thought GameStop had peaked when it hit 70 and it went to 90. And then I thought, well, for sure it's peaked here. And then it went to 200. Now there's, like I said, going to be some smug asshole who goes, well, we all knew it was going to go to 400. But that same smug asshole is the same guy who was saying at 400, don't sell at 400, it's going to 1,000. And it never got there. Point is, take your profits if you got them. Don't chase. Don't buy in at the top of these massive rallies, because chances, more often than not, are that it's going to plummet. It's going to sell off. It's peaked. It's going to dip now and pull back. It might go up later, which is another point with this whole Dogecoin, is I've got all these people going, oh, I can't believe I sold my Dogecoin. I bought it when it was a penny and I sold it when it was 7 cents. Oh, woe is me. Dude, Dogecoin is like 35, 39, 40 cents at the time of this video. You know, it's not like you missed out buying Amazon when it was $500. You know, if you had $3,000, you could have gotten a couple of shares. And now you can only buy one share. It's not like Tesla when it was $80 and now it's $700. It's 40 cents. Buy back in if you want. And of course, never more than you're willing to lose, because with these incredibly volatile stocks and cryptocurrencies, it could be a whipsaw. It could be very volatile. And like I said earlier, if you don't care, if you're just doing this for fun and you don't care if you lose 100% of your money because you're not depending on it, then do whatever you want. But like I said, if you're struggling financially, people always say this could be the greatest transfer of wealth, only if you take the profits. So I hope that answers your question. If you thought this video was helpful, please hit the bell, please hit the subscribe. Thanks for watching and have a good night.